Well, that's the kind of market that we have. Dipen Sheth is now joining us. Dipen, hi, good morning. Thanks for joining us. So, this aberration that we had yesterday, is it safe to say that that was just an aberration and the market's back to its winning ways?
So I'm actually in a funny kind of way, I'm happy this thing happened yesterday because we had almost kind of put geopolitical risk out of our radars. The way I see geopolitical risk playing out for investors in India is that it inevitably gives them a chance to re-enter the train which they might have missed at the last station. These things keep happening. Like I've said innumerable times on your channel, it's difficult to get a fix on what's happening in the Indian economy. There's no point trying to predict what's happening globally. Obviously, we are subject to sentiments, fund flows, liquidity, and global growth trends, which eventually influence our economy and hence the stock markets. But I would think that India is a 10, 20, 30-year story for most long-term investors. And every time you have a little bit of an accident like this, a small black swan creeping out from somewhere, it's going to give you an opportunity to re-enter markets. I must confess that the bounce back today it leaves me spellbound. I didn't think it would happen this early. So obviously we are also going through a phase in markets where things happen and then unhappen pretty quickly. If this is any indication, I don't think we've seen the last of geopolitical risk play out, but then that's my, blue sky estimate or guesstimate. Shouldn't be taken too seriously. Obviously, there is much more geopolitical risk now, and if anything, it will give us a chance to get back into investing in India. At good prices, I may add.
I know Mark Mobius early morning told us the same thing, that he would use the opportunity to buy, if anything. Okay, Dipen, we are standing on the cusp of earnings season. Are you topping up on anything before this earnings season?
So I suspect that this earnings season is going to be yet another season where, everything is pretty much known in advance and we are not going to see major surprises. Okay, so consumption has come off and it's going to reflect in the numbers that come out from autos. If there are people who are talking of buying, let's say, a Maruti or a Hero, they're not doing it because of this quarter's numbers. They're doing it because of some kind of bottoming out which might play out. Remember, the stock market discounts the future. This should be a steady quarter with mostly known things playing out. I think IT should see something like 6-7% revenue growth year on year, 1 to 2% sequentially. It's a seasonally iffy quarter for sure. I don't think this quarter is going to make a difference to the long-term thesis. Some of the bad news will keep coming out, especially on the consumer side, and where the classic FMCG stocks are all at, many of them are at 40-50 kind of multiples. Some questions are going to be asked there for sure.
Okay, since you mentioned FMCG, I'm going to take that cue because I was going through your stocks and you have a very rich list of stocks that you've outlined for your investors for 2020. Let me start with FMCG. Jubilant FoodWorks, Britannia and Dabur are stocks that you like. Right. You think 2020 is going to be the return of rural growth, and is that the reason why you've picked some of these stocks like Britannia and Dabur?
So certainly not for Jubilant. In the case of Dabur, there is renewed focus on their highest selling or top 8 brands and so on. So they are sharpening their portfolio, plus they are increasing their reach. Plus, I suspect that this government is now with its back to the wall, 4.5% headline growth, rural pain, so with floods and so on playing out, and a lot more at stake now politically. I think the taps are going to be opened. There is going to be a little bit of fiscal liberty being taken, and frankly I'm okay with it. The whole world does it when it's required, and why shouldn't they? So I suspect that much of this will translate into very good rural demand, which is going through a tough sentimental phase right now. So remember that rural demand, which used to be 1.5x, rural growth used to be 1.5x urban growth for some time in the trailing few quarters, has just kind of fallen off and is now trailing urban growth. So once that comes back, companies like Dabur are disproportionate beneficiaries. Also Britannia, which is expanding its network and adding new categories to its portfolio. This works nicely for them. On Jubilant, it's about the category having a 10-year growth runway, and this company being best positioned to milk that category.
Okay, by the way,
just everybody would agree, I guess.
Yeah. Don't lose sight of cement stocks, especially the southern cement stocks. Yesterday there was news of cement price hike, but the market was in no mood to react yesterday. And I think today you're seeing all the cement stocks, and particularly the south-based cement stocks, do quite well because there was price hike and call for fresh price hikes from here on as well. Not Sagar, I think let's pull out the bigger ones. India Cement, Ramco Cements, those are the kind of names that are looking up right now. Any thoughts? Cement looks to have a fresh rally right now.
So on cement, it's actually a difficult call to take because the last year has all been about lower fuel prices and very strong cement prices persisting across the country, particularly in the east, and some of that has now given way. North India continues to be a tight zone in terms of supply. South India continues to be a loose zone unless there is production discipline. We are moving more and more from trade to non-trade at an industry level. But for some companies, they've increased their mix in retail trade, which means they will be on a better footing with respect to realization. If a cost squeeze happens, and I suspect we really don't have the pricing power this time around, we should see lower profits. That said, I do believe that North and East continue to afford pricing, which can translate into 1,000 rupees EBITDA per ton. For a number of them, the super duper players like a Shri or an Ultratech are going to be much, much higher.
Okay. IT. That's the
Just
one
on cement, one more thing. Headline volume growth is going to be a challenge this year. If that changes as we move into the Jan, Feb, March quarter, which is seasonally a strong quarter, and that will pretty much set the momentum for the rest of the year. So I think this is going to be a make or break quarter for cement volumes and pricing strength.
Okay. So if you get volumes north of what, 6%, you'll be happy?
Oh, very happy. Anything 5% and above should keep us.
I know they've been struggling at low volumes. So realizations helped out about 2 quarters back, but even that.
But remember, real estate is in a funk. So I don't know how much of sales velocity will translate.
Yeah, exactly. Again, it's rural housing that should
absolutely
come
so
in.
again, the rural spend and the housing thrust and all of that, and that will have an impact on trade, on the retail trade market, which means the people who have high retail trade in the mix stand to gain disproportionately.
Actually, in the budget there is an expectation that some more boost will come for housing. That's one way to help all sectors or many sectors of the economy. What are you going with in terms of expectations from the budget?
I'm actually very happy that the government is in a corner insofar as policy and tax reform is concerned. History teaches us that any Indian government, irrespective of political or ideological affiliation, reacts better than it proacts, if I may coin a word here. Go back to 91, and we had $1 billion in forex reserves, and we were with our backs to the wall, and you had a flurry of reforms. So I suspect that this government is now at a stage where it has fiscal license, let me put it this way. And there's a whole lot of, in my view, in my humble opinion, a whole lot of silly and stupid tax laws. In my view, in my humble opinion, a whole lot of silly and stupid tax laws out there. Cutting corporate tax is the least of my, thrill factors or asks. We are paying dividend out of post-tax profits, and it's still taxed. Even buybacks are now taxed. I think this is silly. It's downright silly, and this has to go. Cement, a basic consumption category like cement, attracts 28% GST. Is that really the stuff that this country is going to be made on?
Okay.
All
right. This
is going to change. If it doesn't change, then I will actually be disappointed. I'm happy that they are with their backs to the wall. They're going to take some tough actions now.
Okay, well, I'll just put some numbers on the table. It's not very easy if you're sitting in the finance minister's shoes. Everybody is printing and spending, but others have less than 4% fiscal deficit. We have over 6% fiscal, almost 7%.
If you add the states and centre.
Yes. So, that is the nation's fiscal deficit. So, when we make our demands to the finance minister, we have to be a little reasonable to her.
But Lata,
cement brings in a large amount of GST collections. So, all the asks, if corporate tax is cut, personal tax is cut, dividend distribution is cut, and cement GST is cut, and you are already at a very high fiscal deficit, and you want the government to spend more so that rural housing gets a boost, let's be a little reasonable with her.
Okay. So, this debate can continue endlessly, but for the benefit of our viewers, we'll just get back to stocks, right? Because you're a very interesting bunch. In the infrastructure space, since we are discussing, government planning to cut spending, etc., let's talk about infrastructure. The two stocks that you like here are L&T and KNR Constructions. Now, L&T has disappointed, hasn't performed. KNR Constructions has done nothing for investors in the last 2 years. Yeah. If anything, it's eroded wealth. So, you still like these names?
So there are two different theses at play here. L&T is a top-down proxy for the sector. L&T is done with its healing of the balance sheet and getting out of a situation where it had very high net working capital, and all that mending has happened. This is India's largest infra company. Its market cap is more than the rest of the pack combined, if I'm right. Okay, the next largest company is at probably 1/10 or 1/15 the market cap of this company. Any large infra spend program of the government, and you can call it 100 trillion or 20 trillion or whatever the hell it is, all the time we keep on throwing these PowerPoints at one another to get excited. If all that doesn't translate into prospects for L&T, when will it? Then you really don't have an argument. The traditional, the conventional wisdom on L&T has also been that you don't wait for L&T's performance to pick up. It's the nature of the order wins that drive sentiment in the stock. I think we are poised for a great blowout in terms of order opportunities and the ordering pipeline, which L&T will be participating over the next few years. Also remember, they have a very interesting overseas business, a set of businesses there. Plus, of course, their stakes in a whole lot of companies, some of which I actually disapprove of, such as, let's say, Mindtree. So, but then you need to add up all of this, and it will translate into value. The stock has gone nowhere. I completely agree. And that's why it might now. Okay. On KNR, it's probably the best managed working capital cycle in the entire industry, and by a mile. So any growth in revenues will translate into cleaner cash flows and profitability, which will attract higher multiples. So this is another compounder if you look at the infra opportunity over the next 5 years. If it hasn't done in the last 2 years, if it hasn't really delivered great returns over the last 2 years, well, that's because of the way we were assigning stupid multiples to the sector, and on both the high and the low side. So I think this pendulum is swung on both sides for the infra pack, and here on I think some sensible valuations will take over.
Okay. The other stock which is in focus right now is Bajaj Finance. Yesterday it declined 4%, today it's recovering. Almost half of that is recovered. But you think it's showed you enough signs that perhaps you want to just take a bit of a step back, or being Bajaj Finance, it will do what it does, correct, and then make a new high?
So you've actually hit a raw nerve here. This is the stock that we don't cover, and so for the longest time we've been regretting it, and then we regret more, and then we regret more.
For 10 years now,
yes.
We realize.
So, but having said that, I think the great thing about this company and the way they run the business is now not just an increasingly diversified set of credit opportunities that they service, but the quality with which they are able to achieve cross-sell, and the simply unbreakable and impregnable way in which they hold on tenaciously to asset quality. It reminds me of my bank. Both of these stocks we don't cover, and that's the thing to admire in both these guys, which is that you are able to grow without running into asset quality accidents, in fact even incidents, let me tell you. So this is why they trade at a multiple to the market. I'm happy I don't cover either one of them, so I can go out on a limb and tell you that, look, these are great businesses. I may not have coverage, I may not have a target price, but it doesn't matter. They are great stories, and they will continue to be great stories because there is a credit opportunity that they are feeding into in a way and with a technique that the others are unable to. So it doesn't matter that headline credit growth is 6 or 7 or 8%. These guys are continuing to compound at a rate which is 2x, 3x market.
Okay. The other space that is something that you're interested in is the pharma space, and over there you have two stocks, Torrent Pharma, and I think Alchem Labs is something that you like. So just tell us about that, because Torrent Pharma has had a terrific run in the last 6 months. It's gone from 1,500, I think now it's almost touching 1,900.
Right. In this market.
In this market. So do you think it's too late to get into this party, or is there more of an up move here?
No, so again, it's not a trading call. It's there in our list of picks for 2020. We still don't have formal coverage on both these stocks because we are going through a little bit of a rejig on the pharma coverage bit. But here's the big picture. Zoom out for a minute. Pharma's had a terrible run over the last 4.5, 5 years. So the index, the CNX Pharma, has gone from 13,500 to something like 8,000. over the last 4.5 or maybe 5 years, right? That's the backdrop in which I want you to see this, one. Two, in the case of both Torrent and Alchem, the accidents and the worries and the hassles that have plagued, so whether it's price erosion or whether it's regulatory accidents with respect to US FDA, that have plagued the rest of the sector, these two blokes seem to be relatively better prepared to tackle such tendencies. Both of them have an interesting pipeline, particularly Alchem. Alchem is a master on the Indian pharma market. Okay, on the acute side, Torrent has got a very good fix on the chronic side. Torrent has also acquired a company which they are now building out on Unichem. They are trying to scale up that business and get synergies out of that. So the intrinsic stories at both these companies are very, very well understood and appreciated, especially with respect to the concerns that plague the rest of the sector, which seem to be conspicuously absent here. So to that extent, it gives us confidence, plus the larger picture of the sector having gone through pain for 4.5, 5 years, not performed. And they're also dollar proxies, don't forget. At least some of their businesses are dollar proxy. So I don't think the ride is over at Torrent or Alchem. They're both around 2,000.
One final question. Chola Investment is one of your favorite picks.
For the longest time.
Yes. You are not worried about Valli Murugappa asking for a board seat in Ambadi Investments? You don't think it's going to disturb?
Does it change
any
the
overhang
operations of
or
the
anything?
company? It doesn't.
No overhang.
It's an internal family. I won't even call it dispute. It's an internal family bit of friction. I think they should be able to sort it out. This is probably the best managed NBFC in the nation.
Obviously. So this is an extraneous factor, but
no,
we didn't discuss.
It's within their DNA to be able to solve this problem, in an amicable way. I don't think it's going to lead to a spat. Remember, the spats typically happen, the public spats typically happen when there's something wrong inside. Remember what happened at Yes Bank? Okay.
Okay, all right.
Thanks a lot for that, Dipen. I just want to tell our viewers that we will be giving you a lot of details about Valli Arunachalam, asking for the stake of MV Subbaiah in the Ambadi Investments, the holding company of the Murugappa Group. We have an exclusive interview coming up, but more on that later. Thank you very much, Dipen, for joining us. Well, markets